This is amazing news, right? So Afreximbank has launched a financing window for Africa's mineral processing industry. And it's a move that could finally let African engineers, investors, and entrepreneurs take on major industrial projects without government guarantees. So what does it mean? So it means that private developers can now build refineries, energy plants, and processing facilities if the numbers make sense, not just if the state can underwrite the risk. In my opinion, this could completely reshape the continent's development path. For context, Africa holds about 30% of the world's mineral reserves, yet captures less than 1% of the value from clean energy tech manufacturing. Despite supplying many of the minerals feeding those supply chains, the continent still exports raw materials and re-imports finished goods. Every single ton exported raw is like a factory job, a research lab, or a tax receipt surrendered elsewhere. So the bank's new president says Afreximbank will move away from financing raw exports and towards supporting domestic refineries, smelters, and beneficiation plants. Can never say that. So the exciting part about this, for me at least, is that it tackles the sovereign guarantee trap. Development banks demand state guarantees at the moment that many debt-stretched governments simply cannot provide. And commercial banks are like, nope, we're not going to carry the risk alone. Afreximbank's window uses a structured finance model blending off-take-backed loans, credit guarantees, political risk insurance, and FX or price hedges to make projects bankable without new sovereign debt. So this essentially spreads risk and attracts new capital. To scale it, it should probably link with Africa Co-Guarantee Platform, which is a collaboration between the AfDB, ATI, Guarant Co, ICIEC, NEPAD, and Afreximbank, which already pools infrastructure risk capacity. So facilities like the Africa Energy Guarantee Facility, for example, could integrate rather than duplicating. Listen, deals often fail, not from lack of will, but from friction, slow due diligence, and offshore escrows, draining liquidity. So I reckon that Afreximbank could probably help by promoting onshore escrows, standardizing DD, and using the PAP system backed by a $3 billion clearing facility in, I think it's 20 countries, to reduce FX mix match. Indonesia's nickel strategy, for example, shows what is possible, right? Processed nickel exports jumped from about, I think it was $3 billion to over $30 billion within a few years of its export ban, creating an integrated battery metal industry. Africa obviously is nuanced, so it cannot copy that model directly, but can adapt the principles. Regional clusters like Ghana's bauxite corridor or Namibia's lithium zone could compete with the right policy and power alignment. Projects need transparent contracts, ESG compliance, and reliable power. So the basics that will unlock concessional finance and lower borrowing costs. But this is access. The private sector can now lead industrialization, not just react to it. The continent owns the minerals, but must own the value chain. Let's talk.